What is up, everybody? I think that I have quite the interesting video for you all today. Found some interesting articles and government documents regarding the IMF's special drawing rights and some recent initiatives that are potentially underway. So first, let me get the news out of the way. I had already posted to Twitter about the Ripple interview with the expansion of rails. That's fantastic. I am more interested in seeing XRP price go up, but obviously we need to build the rails up as far as RippleNet is concerned. And if you've been here long enough, you completely understand that Ripple news does not equate to XRP price action. So, all right. World's largest cryptocurrency exchange, Binance, acquires payment giant Swipe to merge crypto and commerce. This is actually a pretty giant piece of news here. So Swipe is industry's leading multi-asset digital wallet and Visa debit card platform that allows users to buy, sell, convert, and spend cryptocurrencies. So great for Binance. All right, Ant Group and Costco team up on blockchain and shipping. I always pay attention to Alibaba's fintech affiliate, which is Ant. Used to be Ant Financial, and they teamed up with Chinese shipping giant Costco. If you dig a little bit deeper into this, Cargo Smart is basically Costco's blockchain provider. And just as a reference here, Cargo Smart ties in with this Casa platform that I found that's coming out of Russia for freight and logistics. And if you look down, Ripple payment system connects into Casa right here, and Cargo Smart connects in right here. Also, we have Cargo Smart, Costco, HSBC, and PricewaterhouseCoopers interoperability trial, and Standard Chartered is a member of all these trade initiatives as well. And Standard Chartered also, Ant Financial just partnered with them about, I want to say 5 or 6 months ago for their Access platform. And this was a slide share by Standard Chartered. You can see it up here on the right. External connections, Standard Chartered as a provider to RippleNet into their Access platform. I wonder why they'd want to do that. All right, this is the video though. Get into the meat a little bit here. So I don't generally use people's tweets, but I did want to give a shout out because this sparked a little research rant from me to Angelus Sapiens here. And all that I was tagged, and actually it was this Brian that tagged me. Interesting, the IMF have not updated SDR rates since July 3rd. Take all of this with a grain of salt, everybody. I am not sitting here saying that there's going to be anything related to digital assets with them not updating the SDR rates. But what I am going to do is present you with the information that I've found as far as special drawing rights and some other interesting things here. So I'm going to give a brief overview of special drawing rights. If you are already aware of what these are, feel free to skip forward about a minute. So the SDR is an international reserve asset created by the IMF in 1969 to supplement member countries' official reserves. So far, 204.2 billion SDRs, which is equivalent to 281 billion, have been allocated to members. $281 billion, 204.2 billion SDRs. All right. The role of the SDR. It was created as a supplementary international reserve asset in the context of the Bretton Woods fixed exchange rate system. The collapse of Bretton Woods system in 1973, which is basically when we detached from gold, and the shift of major currencies to floating exchange rate regimes lessened the reliance on the SDR as a global reserve asset. Nonetheless, the allocations can play a role in providing liquidity and supplementing member countries' official reserves. Now, a basket of reserves determines the value of the SDR. If you're not aware, it was initially defined as equivalent to 0.888671 grams of fine gold, which at that time was also the equivalent to $1. After the collapse of Bretton Woods, the SDR was redefined as a basket of currencies. Those currencies are the US dollar, the euro, the Chinese yuan, the Japanese yen, and the pound sterling. Here's where we get a little bit interesting here. I found this today, and this isn't even really the big things that I found, but for fiscal year 2021, the administration had requested authorization for about $38 billion for a supplemental fund that the IMF, or for a supplemental fund at the IMF. And this is the FAS. This is in March 2020, Congress enacted this authorization in the Coronavirus Aid, Relief, and Economic Security Act as a way to bolster IMF resources available to support countries during the pandemic. There is an ongoing debate as whether member countries should contribute additional resources to the IMF. Now, here's what's interesting though. Okay, so right now, we can see May 31st, because this is probably delayed by about a month or two. SDR holdings in total are 204,162,099,726 SDRs. Same thing with the allocations there. I found this morning, and I believe this came out yesterday, maybe the day before at the very earliest. This is a bill that's being proposed for COVID-19, cited as the Support for Global Financial Institution Pandemic Response Act of 2020. Gets into SDRs down here a little bit. Now, I'll read you the two interesting sections here. Section C, to require approval of all special drawing rights allocation transfers from wealthier member countries to countries that are emerging markets or developing countries, based on confirmation of implementable transparency mechanisms or protocols to ensure the allocations are used for the public good and in response to the global pandemic. Here's where it gets interesting. The Secretary of the Treasury shall instruct the United States Executive Director of the International Monetary Fund to use the voice and vote of the United States to support the issuance of a special allocation of not less than 2 trillion special drawing rights so that governments are able to access additional resources to finance their responses to COVID. 2 trillion. If this passes, the SDRs that are currently in circulation, as far as the group of 5 currencies are concerned, will be multiplied by 10. I can't understand how this would possibly get through here, but we'll read later that seems to be what they're trying to accomplish here. Now, this is British Prime Minister Gordon Brown suggested debt forgiveness to the poorest nations and that the IMF issue well over $1 trillion in special drawing rights. The United States, which I actually didn't know this, the United States has veto power over IMF decisions and has not acceded to any additional IMF resources. Another interesting thing of note here, this was, I believe, last Tuesday. This order may be cited as the International Monetary Fund Limit on Lending Order 2020 comes into force on the day after the day which it has made, and I believe this was made last Tuesday. That may explain why they've frozen the updated rates for SDRs on IMF's website, because they were frozen as of last Wednesday. The limit on lending of the International Monetary Fund Act is raised to 22,912.32 million special drawing rights. And it goes on to say below, the order increases the total amount that the UK can loan to the International Monetary Fund from 18,657 million to 22,912. So that's pretty interesting. But here's what's really interesting. If they really and truly increase or issue 2 trillion SDRs, that would equivalent to 2,763,734,720 US dollars, if I'm reading that right. 720,000 US dollars. That is a big number. All right, now we get into some interesting stuff here. A little bit of a backdrop for you guys. This is an IMF document published in 2016, and here's where we get into the digital assets portion of this, okay? All right, section 61. The nearly fixed supply of virtual currencies, particularly many cryptocurrencies, could result in a structural deflation in the same way as the gold standard. Now we read here, typically money demand grows in line with the growth of the economy. When the supply of money is nearly fixed, continued money demand growth leads to structural deflation. Because of this, the gold standard and sterling or US dollar-based international reserve systems evolved to economize on limited reserves. Now, however, in principle, virtual currencies could be designed to allow an expansion in money supply, for example, in line with transaction volumes. That is definitely more so in line with CBDCs, because do you think they're going to, if a central bank comes out with a digital currency, do you think they're going to cap the limit on how many that they can release? No. They're going to continue to release them, which inherently, to me, is a huge flaw with central bank digital currencies. It doesn't solve the problem with fiat. All right, this is interesting too. And I'm going to get a little bit into just personnel moves here. So this is Jess Chang, counsel, legal department of the IMF. And here's her presentation. This is while she was at the IMF. This is about 6 months after she left Ripple. She was at the Fed. She went to Ripple. She moved to the IMF, and now she's back at the Fed again. And I will show you that in a second. But you tell me that that's a coincidence, and I'll tell you that I'm a friggin' millionaire already from my crypto investments, because I'm not. DLT and cross-border payments. This is presented at the Law and Financial Stability High-Level Seminar in 2018. The rule of law in a digital world. She goes down, talks about how cross-border payments work today. Now she talks about how cross-border payments work with DLT. Now, they do talk about basically just settlement occurs in the bank's own books, which inherently is still nostro and vostro. But if you go down below other DLT-based approaches, which is something that she would have been very familiar with working with Ripple and working on utilizing XRP. And this is other DLT-based approaches from Jess Chang here. Automated processes like Interledger Protocol, obviously invented by Ripple, and Corda Settler obviously utilizes XRP or can utilize XRP. And crypto assets as a bridging tool. Why does this matter? And she goes into detail out how important these developments are. Now here is her LinkedIn. She has served as a senior counsel at the Federal Reserve Board from January of this year until now. She's still there. She's working on the FedNow payment system, payments modernization projects, and analytical work on digital currencies. Very interesting that the Federal Reserve Board, she's right there in her description. I mean, we know what FedNow is. We know what the Faster Payments Task Force is. We know what Fedwire is. We know Ripple's relationships with them. This is where she's sitting now. And she's doing all this at senior counsel at the Federal Reserve Board. Prior to that, she had a very quick transition. She moved January 2020 right into Federal Reserve from being counsel at the IMF, the International Monetary Fund. I led the fund's work on legal and policy issues on fintech, including areas of tokenized assets and stablecoins, DLT and blockchain, data protection and privacy, and open banking. Prior to that, she went from February 2018 to March 2018 from Ripple Deputy General Counsel. She created the legal framework that underpins the RippleNet rulebook and provided pragmatic product and regulatory legal advice on cross-border payments, blockchain, and DLT-based solutions and crypto assets. It's all a game, in my opinion, and I'm not sitting here telling people to buy XRP. I wouldn't do that. I'm presenting the facts. I'm presenting what I find. It's so clear, cut and dry as to what is going on across the board. This is one person that you can pinpoint the track record of where she's moved to. But I mean, I understand that it's speculation. I understand when you're looking at people's job moves and stuff like that, it's not cut and dry. Everybody moves for different reasons, but this is pretty self-explanatory. I'm reading this. It doesn't take a whole lot of common sense to understand what's going on. Prior to Ripple, May 2011 until August 2015, she went to Ripple the next month. She was counsel and officer at the Federal Reserve Bank of New York. Specialized in central bank financial services, including Fedwire funds and other payment systems, international cash services, and gold custody. Pretty cut and dry, everybody. This is the Bretton Woods Committee. This is from 2016. David Mills, Assistant Director of the Reserve Bank Operations and Payment Systems Division of the U.S. Federal Reserve, addressed the role of central banks in modernizing payment systems and described the objective of the U.S. Federal Reserve Board as providing safe and efficient payment systems. Mills expressed cautious optimism that cryptocurrencies offered as an alternative to the current system of payments, but was concerned about the risks that non-bank actors would bring to the financial system. He pointed to Ripple, a dollar to euro encrypted foreign exchange network, as a positive example, but argued that more research is needed before considering government integration. I wonder what's been happening for the past 4 years, because we know where Ripple members sit as far as on these governmental financial institution boards. It is so it's so ridiculous that people don't realize what's going on right now. Oh my God. Okay, so I'm gonna keep moving here. All right, this is interesting, and this is just real quick. This is another IMF Connect update. Now, they go in here and talk about DLT crypto assets. They specifically call out Ripple's XRapid platform, and prepared by John Kiff and Hunter Monroe, with a special contribution from Jess Chang, who we just talked about, former Ripple employee, who was then counsel at IMF, who is now a senior board member at the Fed. All right, this is Deloitte. If you're not aware, Deloitte is 100% a Ripple partner. They Project Ubin, they integrated Ripple and Stellar blockchain networks. And, you know, Deloitte also facilitated integration of Ripple into Temenos T24, which I think now is just Temenos Transact. All right. Now, I'm going to get a little bit deeper here for a second, but, you know, I hope you can bear with me. The opposite point of view is that adopting SDR as a reserve currency would not change the fundamentals or current status quo, as it is simply an aggregate of fiat currencies and would lose value like a fiat currency if the nations in the basket print currency with abandon. Holy crap. A little bit of freaking common sense. That's exactly, I mean, that's the same thing that's going to happen with CBDCs, everybody. I don't think you realize that. If the government puts out a CBDC and it gets utilized and adopted and they need more CBDC, they're going to print more CBDC. It doesn't solve the problem inherently. Maybe quicker, maybe more efficient to track you with, but it's not going to solve the problem with currency. If a global reserve currency is to be stateless, it also needs to be independent. This means it would need to be supported by enforceable taxation rights across participating countries, or valued against a single commodity, gold, for example, or a basket of commodities such as gold, oil, grain, etc., owned by an issuing entity. A third option, enabled by our increasingly globalized and virtual world, is to adopt a stateless cryptocurrency. The trust dynamics that limit the adoption of cryptocurrencies within a closed community is also limited to adoption across communities. Money is a technology for resolving obligations between individuals who don't know or don't trust each other and for whom barter is too awkward. The strongest possible driver for national adoption of a cryptocurrency is for the national government to mandate that taxes be paid in the cryptocurrency. Similarly, the strongest possible driver for global adoption of a global reserve cryptocurrency would be global institutions that can force their will on most cross-border trade, mandating its use. Read that again. The strongest possible driver for global adoption of a global reserve cryptocurrency would be global institutions that can force their will on most cross-border trade, mandating its use. Otherwise, stateless cryptocurrencies will continue to play a niche role in the global economy, just as they do in national economies. Individuals and institutions will still find it more convenient to conduct their business in one of the currencies at either end of the transaction. National fiat currency, I agree with that, because people are lazy and they don't want to get more into the technology. They just want to use what they're accustomed to. In a trusted third currency, which by sheer size may be the global reserve currency, or in a weighted basket of currencies as a risk management strategy to limit exposure to any single currency. International intercurrency exchanges may travel over peer-to-peer technology platforms based on or inspired by the technologies that underpin cryptocurrencies such as Bitcoin or XRP. But value will continue to be stored and exchanged in conventional sovereign currencies. That's partially true. They say Bitcoin's a store of value, but I personally don't think a store of value goes from 10,000 to 4,000 to 6,000 to 3,000. I do think that as institutional investors and people actually do understand and the utilities being utilized of digital assets, you're going to see more of the store of value come across the board, because it's just going to make sense. But they're talking about Nostro and Vostro still here a little bit too, withholding the reserves, but that eventually dies. One of the hopes for the SDR was that it would function as a reserve currency, though the SDR is neither a currency nor a claim on the IMF. Instead, it is a potential claim on the freely usable currencies of the IMF's member countries. We talked about those 5, right? One school of thought 70 years ago was that the SDR would be the IMF would be the custodian of a global reserve currency. However, SDR was overtaken by history when the Bretton Woods system collapsed and the major currencies shifted to floating exchange rates, facilitated by the growth in international capital markets that simplified borrowing by credit-worthy governments. Okay. Borrowing and debt. That's a fantastic way to keep moving. This is January 2020, ladies and gentlemen. This is the World Economic Forum. They are telling you what the stakes are. They're laying it out for you. It's clear-cut and black and white. You won't see this on CNN. You won't see this on Fox News. You won't see this on any of the mainstream media. You will see this if you actually look into and research what's going on in the world. The stakes. This is the last paragraph about epic changes and monumental challenges for blockchain in 2020 by the World Economic Forum. The consequences of inaction by business and government leaders have never been so stark. Consider the epic showdown shaping up for 2020 to create a global digital currency. First are traditional crypto networks like Bitcoin. Second are corporations like Facebook. Can other digital conglomerates be far behind? No, they're not. Next up are nation states, with China implementing its digital currency in 2020 as a step forward to replace the US dollar as the currency of record. And like we showed you before with the IMF and the SDRs, the US dollar has a much higher weighted average in the SDR than any other currency that's in there. Also, as far as trade's concerned, the US dollar is accepted everywhere. So China is trying to change that. This will no doubt stimulate the US Federal Reserve to push ahead with the digital dollar, obviously. As others join in, we'll see most other sophisticated countries support Mark Carney, who was the governor of the Bank of England while they trialed Ripple, along with some other DLT initiatives. More sophisticated countries support Mark Carney's vision of a synthetic, I'm going to mess this up, hegemonic currency, which would grow from a basket of other fiat currencies to dominate money globally. In the coming years, central bankers, policymakers, and business leaders, all of us, will have to decide what the future of the digital economy will look like. Western economies have an opportunity to embrace decentralization and the Internet of Value. Where else have we heard Internet of Value? And in doing so, maintain their leadership positions in the global economy. However, leaders will need a level of flexibility and openness that we have not yet seen. As with everything bold, the future is not something to be predicted, but to be achieved. Now, I'm going to close with this, okay? This is Mark Carney's proposal for a synthetic hegemonic currency. Carney goes on to point out, should I go from the beginning? All right, I'm going to go from the beginning and then I'm going to end this video. In a speech at the 2019 Jackson Hole Symposium, Governor of the Bank of England, Mark Carney, suggested issuing a global synthetic hegemonic currency, or SCH. And for those of you who are not aware, this is basically, and I don't support the whole one world currency thing or anything like that, but this is what this is. They're talking about a one world currency here. His starting point was 2 observations. First, the US dollar's domineering influence on global trade and the international macro-financial environment, with the attendant risks of a shortage of risk-free assets and a liquidity trap. US dollar remains the dominant currency. Situation exposes other countries to dollar fluctuations. If you've never heard the phrase, if you're not in the US or even if you are, as far as how dominant the dollar is, it's when the United States sneezes, the whole world catches a cold. I mean, it's pretty much true. If our economy sinks because of the dominance of the US dollar, if the US economy sinks, the whole world is affected. I'm going to read on a little bit below here, though. This is about more like DLT here. And then I'm done, I promise. Carney goes on to point out that new technologies allow entrants on the payment services market to offer low cost, more convenient services to cater to their customers' needs. The highest profile of these initiatives being Libra, which we know all the regulatory hurdles they're going through. Given the regulatory standards and obligations that Libra must meet before its launch, Carney asks whether such a new synthetic hegemonic currency would be best provided by the public sector, perhaps through a network of central bank digital currencies. The synthetic hegemonic currency would be backed by a basket of currencies. However, Carney does not provide details about the currencies that could be included in the basket or about the criteria that will be used to select them or to determine their relative weights. The advantages of a public SHC would be that the volatility of capital flows, particularly into and out of emerging countries, would be reduced. I wonder how they would do that. Furthermore, supply of safe assets would be increased and downward pressure on equilibrium interest rates would be lessened as currencies other than the dollar in the basket came gradually to be seen as reserve currencies as the use of this synthetic hegemonic currency spread. This sounds a hell of a lot to me like a bridge asset, just to, I'll put my speculation and my 2 cents in there. I can't imagine all of these governments across the board coming out with a global currency with all the red tape that would actually go into that. All right, an instrument already exists that is designed to play the role of an SHC. This is a question of concern. And that is precisely a basket of the main currencies, namely special drawing rights. We already talked about the negatives of special drawing rights. They inherently lose value, right? You just have to keep adding to them, correct? Because the value of the dollar has went down drastically since whenever, 1972 or whatever it was, we detached from the gold standard. It's pretty straightforward. All right. Who would issue the SHC and how would it be managed? The term network of central bank digital currencies suggests that CBDC issuing central banks, or at least some of them, might cooperate to create a super central bank that would issue the SHC. However, how would issuance of the SHC be combined with that of the currencies in the basket? A potential configuration might be perfectly elastic issuance. As with cash currently, all SHC demanded would be provided or destroyed. Even so, it's not certain that the supply of assets would be increased by this because central banks issuing currencies in the basket would have to invest funds recovered in the exchange for issued units in safe assets. I mean, I don't feel like I need to continue to bore you guys with this stuff, but I do want, this is the Bank of France, Central Bank of France. In this same document, they talk about Ripple being issued. Units on the wholesale CBDC's native blockchain could be transferred to other blockchains since the attributes of a unit of the wholesale CBDC may be integrated in a crypto asset circulating on another blockchain, which is possible on Ethereum and Ripple. So they're talking about this global hegemonic, whatever you pronounce it, currency, and a supranational, a supranational bank or whatever it is. I think that they're legitimately, I think Mark Carney was legitimately talking about a basket of assets that can be bridged by a currency. That's my opinion on that. Take that with a grain of salt. Take all of this with a grain of salt, by the way. Another thing that I often think about, and just I'll BS with you guys for a second here, and then I'm going to be done. I think about, what if they do add digital assets into, once they have enough liquidity, they add them into a basket of currencies. For people to say that's crazy right now, what's crazy is that the equivalent of reserve or bailout currency that we have right now through the IMF, the SDR, all of the currencies have lost value. I mean, they don't maintain value. That's crazy. All right. To leave you with this, again, I don't support the single global currency thing. I'm just preventing what, Mark Carney and apparently some others, because the World Economic Forum says we're rushing towards something like that. A single global currency, what Carney called a synthetic hegemonic currency supported by the world's central banks, could reduce reliance on the US dollar. And he said, dampen the domineering influence of the US dollar on global trade. In theory, the SHC, like Libra, would be anchored by a basket of government currencies. I hope you guys enjoyed this video. I know it was a lot to take in. Sorry for boring you with some of it, and I appreciate all the support, and Hopefully I find some more stuff tomorrow. All right. Have a good night.